So today in crypto analysis, I'll be talking about this recent dump that happened within the last few days, and also how that could lead to these head and shoulder patterns that we've been talking about. I'm also gonna be talking about key resistance levels, for instance this line, and how if we break to the downside could lead to even lower prices that we expect. I'm also gonna be talking about a really important topic, which is stop losses and how you can actually use them to protect your trading. I recently made some mistakes within my trading, and I want to share that experience so that we can all learn from this. So if you're curious about this, just chill and keep watching. So hello everyone, how's it going? Welcome back to my channel, and this is your host, the Chicken Entrepreneur. So let's head into the analysis. So we've seen this recent dump, and one of the key reasons is that we've been having this upwards channel that I was talking about earlier, and how potentially there could be a second channel to open this area, because we've been talking about this very constrained uh, upside or uptrend, and the channel was really stretched. So what ended up happening is that we actually widened that channel into the downside, but actually this could lead more into this formation in this head and shoulders than to a second uptrend channel. So let's take a look into it. So when we broke in here, one of the key indications was this 200 EMA. The exponential moving average is a very strong resistance in the hourly chart. So we've seen before that before breaking this, it has always been bouncing. And with that theory that I told you of the path of least resistance, we can get into seeing these bounces when these trend lines and also when these resistances are together. But well, even here when we saw some resistance with a 50 EMA, but once it broke and it also broke this line, there was danger to actually go down. I was hoping for it to retest this line at 200 EMA here, which it actually bounced up, but it ended up going down. And also you'll notice that I've been including this Ichimoku cloud. And basically that's a way to foresee where some resistance is gonna be to the upside and to the downside. So for instance in here, when it broke, we didn't even had actually this green cloud. So whenever there's a green cloud, you're most likely to find some bullish resistance, and the opposite is true for the red cloud. So in here we didn't have any support at all, and that's why also we broke this 200 EMA and we went just back down. I was hoping to find some support at 4.5, I mean 6.5k level, but we didn't find any, and we continue going down. We found some support at 6.3, and the price was hitting around this area. But again, it broke down because we were crossing these two lines. So whenever the 200 EMA and the 50 EMA cross, that could be a really important indicator of short-term or medium-term kind of trend. So we can see now that the price is consolidating. And if we take a look at the bigger time frames, we can see that this trend line that I drew, it comes from these two bottoms, from where the price actually closed. And this is a really important indicator because right now it's basically the only resistance that we really have over here. So if this is why it's so important, because not only this head and shoulder pattern is relying on this line, but also it's the only resistance that we actually have. So it's a very important level. And right now we're looking at the chart, and it's kind of forming this ascending triangle. And this could really be important. And one thing that I'm expecting is right now like 5:51, so it's 9 minutes before this candle closes, is that we need to be ending up above this 50 EMA, and that could be a good indicator that we could try to go up. Of course, we have a lot of resistance up ahead. We have this 6.3 level to test again. We've been going back down. We have this 200 EMA, and we have this upcoming cloud. And one of the reasons that if you've seen Carl's channel that I've mentioned, the Moon, he really talks a lot about how this is not a no trade zone. And I just want to expand a little bit over that. And the reason we know all this between the 6.8 and the 5.8 is really a no trade zone is because everything indicates to do opposite things. So for instance, if you go to the 1 hourly chart, the stochastics are oversold basically. And that's an indicator that probably the momentum is ending up and the price is gonna go down. If we go to the 4 hour chart, it's the same story. But what if we go to the daily chart? Actually, we see that we are starting to bottom out. And one of the things that could be happening is that we will see in the short term like a little bit of bounce back in the price. And one of the strongest indicators is when everything aligns in the different time frames. So one thing that I'm expecting is that this move still gets lower and retest this line once again, and thus depletes this momentum that they've been going with the upside. And once this aligns with the 4 hour chart, which is also crossing, we will be aligned with the daily chart. And when this bottoms out and start crossing, it's gonna be a really good indication that the price can actually start moving forwards and possibly completing that head and shoulder patterns. So now that the technical analysis is over, I'm gonna head up to the strategy that I have for this trading and some of the mistakes that I make. So basically, the strategy that I wanted to have is because these are really low prices. I'm expecting this to break upside, so I really want to have some long-term positions going on, and that's even with some leverage trading. So one of the things when this channel created, I actually got after these bounces because I wasn't expecting this 5.8. So I've been trying to ride this wave whenever it went down around here. And every time, well, I was holding, took my positions around here, and I was just waiting to position myself for really long term. So the first mistake that I made is not really taking profits, because even though like my positions were on the green, I did not take profits. Now you can argue that if you want to do daily trading, you would be taking profits every day. You would be closing and opening positions. But even if you're like swing trading and doing it for the long term, you have to realize that there's gonna be these points where the price is gonna retrace, and that's a perfect opportunity to sell some of the positions and to rebuy when it's down. So I mean, so basically, I've been waiting all this time, and I was gonna take some profits at 6.9, even though I mean that was a really bad level because I knew that 6.8 was a very strong level already, and it comes from this previous high. I mean, the reason I put 6.9 is because this was the first high forming here, but like 6.8 was a more important level, I could say. So it didn't break the 6.8. I was expecting for it to go up and then probably retrace, but it actually retraced before. So the first mistake was not taking profits. So that's something you need to take into consideration. And something that I'm doing right now is every time I see the price going at these levels, for instance, once I figure out a channel, whenever it hits these levels, I'm gonna take a little bit of profit. And again, I'm gonna have a downwards just to buy back. And in reality, when you're selling and just buying back, you're extracting some profits and you're still maintaining your positions. And if it doesn't go back, then you're okay because you still have most of your position inside the trade still. So now I want to talk about stop losses and why they're super important. And um, my management of stop losses haven't been the best, and it was mainly in here because we had this channel, so I was expecting to have some resistance, and the problem is that we had these resistances separated away from each other, and that's something that I mentioned before. The strength is when these resistances are together, but when they're separated, the price can really break down or break up in the scenario. So I had a price going down. This was the first indication. Then it broke this line, but still we had a 200 EMA, so I still waited out. And then, I think this was like kind of in the morning, and all this downtrend happened. The 6.5K level didn't resist. And one good level to have a big stop loss would have been like 6.45K. So around here, once it broke that level, I should have just waited for it to go lower. But one of the things that I still had like stops, well, I didn't put the exact stops because we were close to another resistance, and I kept waiting on that resistance to actually help. For instance, here in the 4.3, I thought, okay, maybe we found resistance here. Now we have to go up to the uptrend. But again, that's why this path of least resistance help us to predict where the price might actually go. So we had now these two lines, and that's something that I didn't really take into consideration. So that's something that I have to put more attention into. And finally, something that really uh, put that nail into the coffin for that trade I was doing. I mean, I'm still into the trade, but that was kind of the real hiccup is that the price went as low as in here, and I knew the 6.3K level was a really strong resistance, and I put my stop loss at 6.2K, a level which was way lower, I think. And well, I think that was my main problem because I should have put it like at least 6.25. And one of the issues is that because we were showing certain resistances, I even lowered the stop loss to like 6.12. And the reason is because if it broke that level, that price should have gone really down. And I was like, okay, I can maintain this trade and give it a second chance at a lower level, or I could just let it run. And I decided just to hold, well, to take the stop loss, and this is what happened. It actually touched it, it closed it, and then the price went back straight up. And that was something really bad. I really felt bad about it, but sometimes that's the thing. You have to commit to the things that you've done. And that could have been prevented if I would have committed to the stop losses before and just wait or even trade to the other side. But again, that's kind of what this was going against my original strategy, which was basically just trying to put the trades and just let it run, which is now what I'm doing right now. Even though I got really bad prices, I just put them in. I put the liquidation price somewhere I'm kind of comfortable with, and I'm just gonna let it ride. I'm not really gonna touch anything. Of course, now having taken into consideration what happened, I put all my take profits at certain levels. I put one at 6.5. I put one at 6.8. I put one at 7.250 and so on, just to make sure that I'm gonna be taking profits. And of course, when the price starts reverting, I'm gonna put stop losses higher and higher. And once we get this kind of channel going, I'm gonna follow. I'm probably gonna put a trailing stop so that the price keeps moving up a certain amount, so that I know if it's gonna crash again, at the very least, it's gonna crash in profits and not in a loss. So that's something I wanted to share with you guys. Maybe you can take that into consideration and improve your trading. And of course, this is one of the reasons that I'm doing this channel. It's not because I think I have the best technical analysis or I'm a prophet or anything. It's really to share with you guys what's the path to actually be profitable, and some things that you make mistakes and you have to learn on those mistakes. So, well, this is it for today's video. So I just wanted to say some last updates. So first of all, I'm actually graduating this upcoming Monday, so I won't be able to post videos as much as I would like to. And I'm also gonna go and spend some time with my family because they're traveling from very far away. So I'm just gonna spend some time with them. I'm still gonna try to make some content. It's gonna be more difficult because I don't know if I'm gonna be able to have like internet and have the proper time. But if something really unforeseeable, something unexpected really happens, I'll try to cover it up. And also, I think this opens the opportunity for me to create other type of contents. As you know, I mean, I named this channel the Chicken Entrepreneur and not the Chicky Trader for a reason. So I don't really want to make this a trading channel. Yes, of course, I want to include it because I think that's something of entrepreneurship. I think that's something that not everyone does, that it requires a lot of effort and a lot of dedication and initiative because there's nothing like a school of trading. I mean, there's courses and stuff, but it's something that you really learn and practice and just by doing. So I'll try to bring other content. I have some good ideas, and probably this is gonna be the perfect scenario for me to go and maybe take some shots at different places. But anyways, guys, if you like this video, please click the like button, subscribe if you haven't, and just before I go, just remember to stay smart, stay bold, but most important of all, stay cheeky. Take care, guys.